Hello there and welcome to Life Insurance Quote Shop, to the mortgage insurance page of our website. And I just wanted to create this quick video to tell you a little bit more about how to use this page and this calculator here to find the best mortgage and term insurance rates that you can get in Canada to save yourself a whole lot of money and get the best coverage possible. I'm going to start by explaining these companies, the company logos that you see trickling down here, and you can see that you'll recognize a lot of these companies. These are some major life insurance companies, Canadian companies, and this is all the companies that we actually work with, and that you can get insurance through depending on which one you choose. You're totally in control, and we are just a broker here to give you advice and help you out a little bit. Now, before I show you how to use this calculator, let me just explain to you a little bit more about mortgage insurance, because it's a very specialized type of insurance, and because there is so many options nowadays that you can buy them when you're getting a mortgage at the bank, or your lender will offer it to you pretty much all the time, and a lot of people choose to actually take their lender up on their offer and take that insurance. And let me just start by saying that if you have done that, or if you're considering doing that, the best thing for you to do is consider actually getting out of that, because your lender's mortgage insurance is not the best insurance, and it's definitely not the best price, but there's also other problems with it that you should be aware of. In fact, I'm just going to scroll down here a little bit. There is a link on the bottom of here that you can click on, and it'll take you to a CBC Marketplace website that has run a episode on mortgage insurance, and it'll show you a little bit more about how they work and why we don't advise on you doing that. So I'm not really going to get into it, really right now, because we don't have the time. But let me just say that many times, many people have been disappointed and not have not been paid if they claimed on the mortgage insurance that they've gotten through their bank, because of different reasons, which again are explained in that video. So if you have a minute, you can take a look at that. The main reason for that is because the banks usually don't do any full underwriting up front, and they will do the medical underwriting after the fact when you actually have a claim, and then it could be too late for you because you're not around anymore, and if they deny your claim at that point, then you basically have nothing. There's nothing you can do about it. So the other couple of things that we would want to also mention is that the bank's insurance will be a decreasing term, which means it's going to be decreasing as your mortgage decreases, but your premiums are going to stay the same. They're not going to decrease. So what you can do here is, if you actually buy the life insurance through a real insurance company and buy it on your own, you can have a set amount of years that the insurance is going to stay level, so it's not going to be decreasing, and it doesn't matter what you owe to the bank, the insurance company is actually going to pay you the full amount, and your beneficiary will be able to keep the difference if there is a difference, and in many cases there will be, so it's much better. And in most cases, it's actually quite a bit of cheaper to do it, because the banks actually will not reward you for if you're a non-smoker or if you're in good health. They consider everybody to be the same and give everybody the same rate. So for the healthy people and the non-smokers, you are basically paying smoker rates. So with that being said, let me just real quickly go into the calculator here. So I'm going to run a quote here that's based on somebody. I'm going to do this on somebody that was born February the 6th, 1965. And it's going to be a female, so I'm going to check off your female. And the person's going to be a non-smoker, so I'm going to leave the non-smoker checked off. And I will check the regular health rate, just to be safe. Now, you may qualify for a preferred health rate, and if that's the case, you're actually going to get a better price than the regular. But we never know for sure who does or doesn't qualify. So you can look at both rates if you like to play around a little bit, but I will leave it at the regular. Oh, and by the way, if you click on here, this link will take you to a page that explains a little bit more about preferred rates. So if you're interested to take a look at that, just click on this right here. So the duration, I'm going to leave it at a 10-year duration. Okay. Now you have a choice of doing anywhere between 5 and 30 years, but the prices are different, and the longer the term, the more expensive the policy will be. So I find a 10-year term is a really good way to go. And if you have a mortgage that lasts longer than 10 years, then that's not a problem because we can just renew it after 10 years and adjust the amount to whatever it is at the time that you owe, and that's probably going to work out pretty good for you. Now, the amount, that is the amount of your mortgage, although it doesn't have to be the amount of your mortgage. You can choose to make it a higher amount. As I said before, doesn't matter what the mortgage amount is, your beneficiary will be able to keep the difference from the two amounts, so either way. So I'm going to just do 350,000 here as an example. And let's say you have a mortgage that's 300,000, that's fine. We will still pay you 350,000 anyway, so that doesn't matter. I'm going to choose a monthly payment, and then I'm just going to input my name, so that way I can run my quote here. I'll put my telephone number in there, and I'll put my email address in there as well. And there we are. Compare rates now, and we have all the rates right here. These are all the 10-year level term rates, and you can see that the top companies here are RBC, BMO, Equitable, Standard Life. Those are the top four. And if you continue going down, you'll see there's all the other companies there, but all of those other companies are more expensive. So obviously we are not going to be looking at those. That's why we do this shopping and comparing for you, so that way you don't have to pay the higher rates. There's no reason for you to pay higher rates because you usually don't get anything extra out of that. So let's look at BMO here, because BMO I find is a much better company than RBC in terms of service and underwriting, and the price is almost the same, so we don't have to worry about the few cents. So my policy for 350,000 with BMO would cost me $29.12 if I get the regular rate, and possibly less if I get the preferred rate. Preferred rate could save you an additional 25 to 30%, but again, as I mentioned to you before, we don't know who gets that. Only about 25% of people get it, so we'll just look at the regular rates for now. At this point, what you can do is you can request more information about this particular policy, and we'll be happy to send you some. All you have to do is just click here, scroll down a little, and you have to input your name and email again, so we can email you some more information. And the other thing you can do is, if you're set and you know what you want, feel free to go to the apply online button here, and you can start an application right away online without even talking to anyone. Or if you look at the phone number up here, you can call the toll-free number, and somebody, a live agent, will be able to help you out and advise you in the right direction and take the application over the phone with you. Okay, so those are a couple of options you have at this point. And oh yeah, the only other thing I would wanted to mention to you is, if you click on the free critical illness policy link here, it'll take you to another page which explains a little bit about because there's one company here that will, if you buy insurance from them, they will actually give you a critical illness policy for free, and some other stuff as well for free. So it's a little bit more expensive than the regular rate, but you might find it beneficial to you. So just click on here, and the next page will explain how that works. So thank you again for listening. I hope you got your questions answered, and feel free to call if you have other questions, and we'll see you on the other side.